Alrighty, my beautiful people. In today's video, we're going to be breaking down the exact continuation model that allowed me to make multiple six figures through the financial markets. So, for the plan for this overall video is literally just to tell you guys a strategy. It's one of the many models that I teach and I personally trade. But yeah, this is just kind of going to be the full breakdown, how to build the narrative around it, how to understand what price wants to do on the higher time frame narrative, and then as well as the lower time frame narrative. All of that good stuff. So I'm going to be pulling back the curtain on some insights so that way you guys can have something to use almost every single day. Anyways, let's jump straight into it. So jumping in, I kind of want to build a basic narrative of how the market moves and how we can understand that the market moves. So for example, we know the market builds either bullish structure, right? Or we build bearish structure. Right? Sometimes on these days that we're building extreme bullish structure or extreme bearish structure, you notice we're down maybe 100, 200, 300, 400 points for the day. Now, the way that we treat these days is to look for continuations and for the market to continue, right? So there's only really two ways the market moves. It's either we reverse or we continue. Those are the only really ways the market really moves. So first things first, obviously, is understanding bullish or bearish structure. Right? Once we have the ideology set down of like, okay, is price either trending higher or lower? Now we have our narrative set, right? Okay, well, price is down or up 100 or 200 or 300 points. So I now have the bullish or bearish bias. Now I'm going to try to look for a continuation. That's when typically this model is the most effective during those times and those time frames, specifically in market conditions. So now that we know that, right, what we're basically looking for is when price displaces up or displaces down, it leaves PD arrays. Now, what is a PD array? A PD array can be a fair value gap. It could be a breaker block. It could be an order block. It doesn't matter. Whatever you are personalized to and whatever PD arrays you know within your own trading, you can basically use, right? So we're looking for heavy displacement during bullish either continuation based days or bearish continuation days. Now that we have the narrative understood, then from there, through the displacement, we're looking for what? We're looking for PD arrays to be able to see price rebalance and then continue off of. So for example, if this is a bullish leg and we have bullish price action to the upside, bearish price action to the downside, we're looking for a continuation, right? Either in one of these two examples. Then from there, we would identify, okay, maybe there's a fair value gap right here. So we have strong displacement, we have a fair value gap, and then let's say there's a draw on liquidity up here, right? Okay, then from there, what are we looking for? We're looking for a rebalance back into the PD array, some low time frame confirmation right here that this leg and this PD array is getting respected with this leg. We get some displacement back up. Then from there, what do? We're taking our entries there, we're targeting that next draw on liquidity, and our stops would go below the PD array that we're looking for. And then from there, price ends up running up to that draw. Same exact concept for bearish price action. If you're seeing and noticing extreme displacement legs down, rebalance back up, displacement again, great. Then from there, what are you referring to? If we leave down some PD arrays here, like let's say a bearish sell side imbalance or bearish fair value gap, you can call it, we're looking for price to rebalance back into that bearish fair value gap and then start to displace off of it. Once we have that confirmation, then from there, we can base our entries off of that, put our stops above the PD array, and we would be targeting that next draw on liquidity, wherever that is, right? So either that first internal low there would be our first draw, and maybe the second draw is some points away, and then you would be targeting that second draw. So it's a very easy ideology. It's very simple. Now, what I've noticed, I've studied a lot of other traders. I've studied a lot of other discords. I studied a lot of other people, profitable day traders, and also my own Discord members. And what I've noticed is days in which we continue are typically the days in which majority of people make money. And the reason for that being is because everything's so clear and obvious. It makes sense. Okay, we have bullish structure, we're going to continue. Oh, we're down 200 points on the day. We have bearish structure, we're going to continue back down, right? So it's either one or the other. Once you've identified that you have your narrative set correct, you wait for a PD array on the lower time frame, like a 1 minute fair value gap, either bullish or bearish, depending on what the context or what narrative is for the individual day. Then from there, you're looking for a rebalance back into that PD array, and you're taking your entries off of the actual PD arrays. So if you're confused right now, still don't worry. We're going to jump into some actual live examples, and I'm going to be basically showing you guys some actual in-depth examples. So let's jump straight into that. One thing I did forget to mention that are some add-ons you guys can use are internal structure manipulation, right? So for example, If we get that rebalance into that P to rate, on top of that, we have maybe a SMT at that low. That's even another confluence you can add on to say, okay, that's even more confirmation price more than likely wants to continue back up. It would be literally the exact same thing for a bear structure, right? So you'd identify the previous internal high, internal low, internal high. And if we have an SMT there, great, rebalance, make that SMT another confirmation that price wants to basically continue back down up or continue back down, right? So that's basically how you would add that on, right? There's also a bunch of different things, right? Like you could, for example, we could completely wreck that sell side imbalance, run down, create internal manipulation there, right? And then from there, you would take entries off of displacement, something like that, right? And then you would put your stops below the manipulation leg. Same exact idea for the bearish continuation, right? If we were to run up, we were to manipulate that high, disrespect that, then you would basically be waiting for the displacement back down from this leg here. So like something like that, and you would take your entries here, you would put your stops above the manipulation, and you'd be targeting that first draw on liquidity. All right, so internal manipulation, maybe either an SMT or a total soup or an internal liquidity sweep, and then we get displacement back up, take your entries. Displacement back down, take your entries, right? Sometimes, not always, we have internal manipulation. So it's really important to be discretionary, to ask yourself, what are we doing within this fair value gap here, right? So for example, if we're running back up, but then there's this sell side imbalance right here, or there's another fair value gap here, but then we're disrespecting it, then obviously what would you do? You wouldn't take the entry because it doesn't make any sense. That's where discretion is, right? So a lot of people will talk about discretion within the markets, discretion within trading. It's kind of confusing, right? But where discretion comes into place is understanding, okay, which one of these PD rays is going to hold? Is this fair value gap going to hold? We look kind of weak right now, so I think price is actually going to run lower. So I'm not going to take the longs there. I'm going to just step away, right? So it might sound really confusing right now, but we're going to jump into some live examples, and I'm going to show you guys what I'm actually talking about. All right, so this is a perfect example. We had CPI on Friday, and this still worked for even CPI. No matter the news day, probability-wise, there's always a setup within the individual day for this specific model. So for example, if you guys referred to that earlier example I gave you guys for bullish continuations, it looks like what? Displacement higher, rebalance lower, displacement back up. Sometimes what we'll do, like I mentioned, is we'll run down lower, we'll manipulate that low to then start running up higher, right? So great. If we understand that, where's the draw on liquidity? It would be this swing point here, this low. There's a lot of displacement to the upside. It looks like we want to have a bullish continuation for CPI. You'd refer down, we manipulate that low, and then at 9:30 open, we start getting displacement back up. You would take your entries here. You'd put your stops below that wick low, and then you could target either that first swing high or the CPI high, right? And that ends up getting smacked, right? So very simple. It's like, okay, it depends on what the narrative is, right? This is all accumulation here. So displacement, accumulation, rebalance lower. We manipulate that low, rebalance back into that CPI buy side imbalance, and then displace back up. Very, very easy and effective example. Let's get into the next one. All right, so perfect. We have the next example. 9:30 opens, just displacement, displacement, displacement. There's no really entries here. I mean, you could have taken like this entry, for example, this rebalance here. But something else that could work is, okay, we're accumulating, we're running down lower. Now, at this point in time, right, if we, for example, look at 10:11. Now, this doesn't work. Now, why does this not work? Let's take a look. We're longing here. Let's say you're targeting this high, and you're putting your stops somewhere like here, like a 1-to-1. Why doesn't this work? Well, we got to take into context and examples that were basically previously referred. Number one, is there manipulation? Well, this is just a rebalance, right? There's no really manipulation here. Number two, are there any PD arrays? Okay, I mean, there's that order block. I guess you could say that there's an order block there, but that's just low probable, right? Now, the reason why that's low probable is obviously because of the fact that we want to see a deeper rebalance from how much we've displaced, right? So if this is 9:30 here, from 981, that's 201 points that we've ran up higher. So do you think off this baby rebalance, we're going to just continue higher? No. More than likely, we're going to want to create some form of manipulation, generate liquidity, and then run up higher. Okay, so now that we understand that, we're not going to take that entry, right? We wouldn't go long there. We would wait, we run up higher. Now that there's that swing point low that I was referring to, what do we also have? On top of that swing low, we also have these buy side imbalances right here. Great. Now, I would love to see what? I would love to see this. Boom, boom, right? Internal manipulation, rebalance back into the PD arrays, and then our entries. Let's take a look. run down lower, manipulate that low back into the buy side imbalance. We need some low time frame confirmation though, because price could easily next candle open up, just start displacing lower. Where we would get confirmation is if we got some displacement to the upside, and then we would take our entries based off of that. So what does price end up doing? There's your displacement. You take your first, take your first entries there, go long somewhere here. You put your stops below the PD array, and then you would be targeting right around a 1-to-1, right? And then price ends up meeting that 1-to-1, and you could even have targeted, right, that swing point there, and that works. Rebalance lower, back into the PD array, internal manipulation, continuation. Now, why is it a continuation day? Look at 930. What did 930 do? Straight 200 points to the upside, displacement, heavy upside, right? That's how you trade continuations. You're not looking for like down here, oh my God, we have this little fair value gap down here, I'm gonna long this. Yeah, sure, it did work here, but that's bullshit. There's no actual bullish structure here. Where there's actual bullish structure is if you refer down, we start accumulating here at 10 o'clock. There's a little fair value gap here. We have internal manipulation, displacing back up, very easy. And all of this is solely dependent off what? Your narrative. Your narrative has to be correct in order for this to work. Now, for example, if this same example happened, but let's take, for example, we ran down, displaced lower, run up higher, run down lower, and then we're doing this, and we're like here, then I wouldn't be taking longs here, right? Because why? If you look to the left, the narrative is what? Bearish. Displacement lower, rebalance higher, displacement lower, rebalance higher. We wouldn't be trying to long this area. But for this general case scenario, since instead of that, it looked like this, heavy displacement to the upside, deep rebalance back down, then from there, the narrative is aligned, right? So narrative alignment is key, and it's huge. If you don't have a proper narrative instilled, well, then what do you have? You have nothing, right? You have no basis of entry. You're just gambling, right? So it's huge, and it's so important to understand that differentiating factor. Anyways, let's jump into the next example. Beautiful. So we have the next overall example. Now, what does this day look like, right? If we refer back to what we basically were looking at, displacement lower, rebalance higher, displacement lower, rebalance higher. Great. Now that we understand it's a bearish continuation sequence, what are we looking for? We're looking for some sense of a rebalance and displacement off of it. Where are some PD arrays we can identify where price wants to go? Well, if we refer, right, where overall, is there any sell side imbalances here? No, not really. Where's kind of like equilibrium of this range? So what equilibrium is if we map out a fib from the high to the low, the 50% point of that general range, right? So 50% of that general range we mapped out. Okay, well at 50%, there's these sell side imbalances, right? We have this sell side here. We also have that. So we can just map out this general range. So if we have this general range, we want to start looking for continuation back down lower once we've tapped into this general range. Price runs up. Great. Great. Now that we're in this general range, I want to see more accuracy. That little sell side imbalance there. Now, if we start displacing above, so if something like this happens, for example, then we wouldn't really be looking for bearish continuations. We would probably look for price to run up back up to these highs. Great. Now, what does price actually end up doing? Well, let's refer. Nothing yet. No displacement. No displacement. No displacement. Boom, there's your displacement. You would take your entries there. You'd go stops above. You can go stops above the PD array, and you would be targeting, target like 50 something points there, 1-to-7 R. Boom, and then price ends up gradually meeting that low. We also all the way run down to that swing point low. That's how simple this is, guys. Like, you can make trading so simple. I know you crave accuracy. I know you want to be so accurate every single time, but the reality is if majority of you guys really just made your trading simple based off continuations, your trading would immediately blow up in a good way, right? Your trading would really, really start to do good, and the accuracy you would get in terms of win rate would be high. Now, accuracy wise, risk to reward ratio, it's not going to be the highest, right? Like for example, in this realistic setting, if you're targeting 60 points, a 1-to-7 R, right? Ideally, I know a lot of you guys like trading 1-to-3, 1-to-5, 1-to-10, but you can even with these continuation based models have extremely good R. Because once you start building the discretion where you understand, okay, this is where I want to see the high get put in, what ends up happening, right? You could show your stops there. And if you could target there, there's your discretionary based entry. That's a 1-to-7 risk to reward ratio. Obviously, you guys aren't going to be able to understand this and be able to do this every single day starting off, but you start working with the model every single day. You allow a little bit of inaccuracy, like a 1-to-1, 1-to-2. Then from there, you build the discretion along the lines of that. Once you've done that, then you could start targeting way more points. You could start risking way less points. You have so much better of an R, and that's how you can build your strategy so much faster than how basically you're going about it right now. But anyways, let's jump into the final example. So for this final example, it's a little bit more advanced, but I wanted to leave you guys off with some sauce. So basically, we understand the narrative, right? 930 does what on this Monday? Displaces a lot. How many points is this? This is 60 points in one singular minute, right? So that's a lot of displacement. Now, what would you be looking for? Some sense of, right, displacement, rebalance, displacement. Now, some sauce I can leave you guys off with is, for example, if we're here, let's skip a little bit. If we're here, we have this leg high to this leg low. If there's no fair value gaps here, you can't really base off of like where price wants to go. Like, oh, well, how do you know where price wants to go if there's no buy side imbalances here? Well, what you can do is you can map out the swing high point with your fib tool to the swing low point, and now you have 50% of this general range, right? So if 50% of this general range is more than likely to get rebalanced to, since there's no fair value gaps, what would you do? You would wait for a rebalance into it, displacement off of it, and then you would take your entries. So remember that level, 0.5, right? So right there, 203. What ends up actually happening? 203, there's the 50%. Price ends up running off of it, right? So like you could have taken entries, wait for 50%. If we start respecting, take your entries there and go like stops below, and then you'd be targeting like that high, right? You can go stops below that wick low, and then you'd be targeting that high. There's a 1-to-1 R. And I believe you got a little bit more after that. Yeah. So, I mean, you could have even targeted more, and that's where discretion comes into play, right? Like if you have strong discretion, you understand where price wants to go, and overall, you know where you want to put your stop loss properly. This model can get up to a really high risk to reward ratio, but in the beginning, obviously you need to be more lenient. So like what I would do if I were you guys is I would just be targeting 1-to-1s, right? So like 38 points, 1-to-1 risk to reward ratio, and then that ends up getting met. Right, and this runs. And how you built the narrative off of this was understanding, okay, 930 displaced a lot. We get rebalance displacement, rebalance displacement, rebalance displacement. That's bullish continuation days. That's how you actually spot them properly and effectively. But anyways, my beautiful people, now you guys have a strategy that will allow you guys to start getting payouts. A lot of people will claim, well, this is my strategy, it's so good, yada, yada, yada. The best thing you could do right after this video is go backtest it. Go just backtest it, look at the results. If it's anything below a 60% win rate, below, I should say, a 1-to-1 risk to reward ratio, that means you're doing something wrong. But the best possible advice I can give you guys, trade the strategy, backtest, forward test, journal, and do everything in your power around this strategy to start building discretion with it. Now, obviously, my Discord is basically a place to get a little bit more advanced within this individual strategy and other strategies, such as my reversal strategy. I also have different types of continuation-based strategies. But, I mean, this strategy alone is more than enough. You could use this strategy, and if you still need help, you guys know where to basically come to. Anyways, y'all, if you guys enjoyed this video, if it helped you out, if you learned something, let me know. And yeah, man, I love you guys. I'll see you guys in the next YouTube video. Peace out, y'all.